morning, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodity market updates. So, beginning with gold, gold and silver, in fact, have been eking out small gains over the past 2 or 3 weeks amid speculation that the Fed could be nearing its monetary policy tightening cycle. The recent inflation data has definitely suggested that. The annual inflation rate fell or slowed to 3% in the month of June, while the annual core inflation rate also eased to 4.8%, the lowest since October 2021. So the Fed could definitely acknowledge this in this meeting tonight. Of course, the labor market conditions are still tight, and the Fed could acknowledge that as well. So we have to wait and watch how or what is the statement. The most markets have already factored in a 25 basis point hike in the month of July, that is tonight. But the statement from the Fed chair Jerome Powell will be extremely important going forward. Which could offer more insight about the central bank plans for the future interest rates for the rest of the year. So that will be the key trigger for the markets. We see that the markets can remain range bound ahead of that. Domestically, we see the range anywhere between 59,000 to 59,300, 59,400 ahead of that. And internationally also, the markets could consolidate between 1950 and 1970. However, after the meeting conclusion, depending on what the Fed says, depending on what Fed Chair Jerome Powell says, we see the markets range can change again. Any signs that the central bank is planning to hike beyond July will be a negative for gold and silver prices over the next few days or so. So overall, it all depends on what the Fed decides going forward this Wednesday. Moving on to crude. Both domestic and international crude prices are on the way for the fifth straight session of gains on bets that market will tighten further and demand will also improve. Cuts from Saudi, slowing exports from Russia, and steps taken by China to boost their economy continues to be the key driving factors of crude oil prices and have been over the past 1 week or so. However, the dollar remained elevated over the past few sessions. Dollar regained some ground ahead of that Fed meeting. So looking at, we see the Fed meeting will be the key again for the crude oil prices, and depending on the statement, if it's hawkish, then we see further correction for crude oil prices. But if it's dovish, then I feel that crude oil prices will continue to rally further going forward, at least in the coming week or so. Fundamentals still remain strong. Supply slow or shortage of supply continues to support the market. Further cuts can be expected if the markets continue to remain subdued going forward. Saudi has definitely taken that action, and we see further action can be taken if prices correct further beyond $75 or below $75. So overall, again, crude oil prices can also remain range bound ahead of that Fed meeting. On the charts, we feel $78 or $79 remain a key hurdle for the markets, and a sustained trade above will push prices to $83 or $84 internationally, but a trade below $78 will pull prices all the way back to $75 going forward. So markets can continue to remain range bound ahead of the Fed meeting outcome. Of course, inventory data can also have a small impact on the markets, but overall, the Saudi cuts and the slowing exports will continue to lend some support to crude oil prices. Briefly on gas prices have been remaining range bound over the past few weeks. In fact, extremely range bound. Hot weather conditions could improve demand, but US output continues to remain elevated, and that keeps upside limited. But we expect the gas prices to remain range bound in the coming few days, in fact coming few weeks, and it will depend on the weather conditions going forward in the US. If it's hot, we see further improvement of demand, but if the market remains cool, or I should say weather remains cool for the next few days, then further correction cannot be ruled out. Finally, on copper, international and domestic copper rebounded this week after last week correction on further stimulus expectations from Chinese authorities. Again, China top leaders pledged this week to step up policy support for the economy amid a complex post-COVID recovery focusing on boosting demand, signaling more stimulus steps. However, upside was capped after traders and investors felt that the stimulus measures fell short of announcing large-scale stimulus to support the economy, and that can keep further down upside limited as well going forward this week. Again, like the precious metals and other commodities, base metal traders will be awaiting the FOMC meeting conclusion and other central bank meetings as well. We have the Bank of Japan and ECB meet as well this week, and that will be the key trigger for the markets. So prices could remain range bound ahead of that. Domestically, we see a range of 723 to 745, and this range can change if there is some hawkish statement by the Fed. Possibly we can see hawkishness from the Fed will pull prices all the way back to 700 rupees. But if the Fed remains slightly less hawkish or possibly even more dovish, we see 750, 770 also can be tested going forward for the domestic copper prices. So all will depend on the Fed meeting outcome tonight. So that's it from our side. Thank you very much for listening. Have a pleasant day ahead. Thank you.